it wasn't until Satoshi in 2008 emailed me the paper and then started posting on different forums about it that somebody found out the remaining parts.
This shift in mood made then the adoption possible. What was that click?
The Swiss National Bank has a 1% MicroStrategy in their share allocations, which is of course a proxy for Bitcoin. Will Bitcoin reach parity with gold, and how much scope is there beyond that? Bitcoin price has much more than doubled every 4 years, which is the halving cycle.
How do you reason about this risk? Because yes, the impact would be huge if we do nothing.
Post-quantum signatures have been known about for 45 years, so we know it can be done. Bitcoin fixes all the things, I guess.
Welcome to the Verified Podcast by Bitcoin Suisse. None of the discussed is financial advice, of course. It's all for informational and entertainment purposes only. So sit back, relax, and let's dive in.
Good afternoon, Adam Bach. Thank you so much for being with us today, and welcome to Bitcoin Suisse. And we look forward to having an interesting conversation about everything you're currently building and how you see things going forward. Your project, Blockstream. Tell us a little bit about it. What is Blockstream all about?
Blockstream is a Bitcoin infrastructure company. We build everything from software wallets, hardware wallets with the Jade, layer 2, core Lightning, and Liquid, which is sort of for tokenization, transaction settlement, smart contracting in a security-first Bitcoin kind of way. So it's a separate blockchain with additional features connected to Bitcoin using a peg mechanism. And then we also did the R&D on Fedimint, which is of course a company now. And we proposed shielded CSV, which is another privacy-focused way to extend Bitcoin. So we were quite active in Bitcoin R&D. The company was founded by Bitcoin internals, technologists, and that was because building Liquid, which was the main task, is a complicated thing to do, which requires Bitcoin internals understanding.
Currently, you are seeing, or we are seeing in the world of Bitcoin, a great deal of interest and growth and adoption from not only the early interested players or the contributors, but actually from traditional finance, from institutional investors. What is the main impact that it's having on the technology and on its current, present, and future from your point of view?
Yeah, one of the catalysts was the spot ETF in the US. For some group of users, the way they interact and touch their investments is through an advisor or a broker or a bank. And so if they can't buy it through that avenue, they don't know how to do it. The spot ETF improved that accessibility. There was demand for it dating back years, and there were a long period of time where multiple issuers were trying to start an ETF, and BlackRock is at the front of the pack, which of course is a very big global financial institution. And so I think their involvement in that highly successful ETF adds credibility in the eyes of traditional finance professionals and management. The new administration in the US has been much more open. That has generally improved things globally because regulators do look at each other. Switzerland is a very respected regulator, Singapore, London, the UK has not been so friendly historically, but has shifted post the US moving to open for business stance. So I think you see some kind of positive continuation of that. Before
those vehicles were created, obviously the entire space was to a certain extent looked down at or criticized with. This shift in mood was what ultimately triggered the development of all these steps that you described that made then the adoption possible. But what would you pinpoint that click that all of a sudden something that people were eventually rejecting became interested so that they ended up developing the ETFs and all the other options in the regulation? What was that click?
I think that there was growing demand from investors, and that, applies pressure to wealth management banks because they can see that if their client wants Bitcoin exposure and they can't provide it, they suffer capital flight. Now, Switzerland is much more advanced because a much bigger proportion of Switzerland's banking sector is wealth management focused globally. The FINMA regulator has been much earlier in approving these kind of products. So I think they just built up over time. And, of course, different types of institutions were already involved with Bitcoin, hedge funds, and, there were different vehicles in different countries. But the involvement of higher tier organizations, regulatory approval, even though initially that was won via the courts in the US to approve the ETF via the grayscale one initially. It's, being approved by the court is a kind of establishment approval of some kind, right? And then BlackRock is another implied one because it's a very large organization. And, beyond that, a number of the organizations have put out model portfolio recommendations for, general balance portfolios of 2 to 4%, things in that range. So BlackRock and a number of other asset managers. Now, coincidentally, Sean Bill, who is the CIO at BSTR, which is the Bitcoin Standard Treasury, so that's a treasury company that I'm the CEO of, and Sean is the CIO that's awaiting regulatory approval in the US. And he was a fund manager, hedge fund manager for a few decades, and also then ran a pension fund, including managing and overseeing between 3 different pension funds, 50 billion of AUM. So he was the first, he made the recommendation for one of those pension funds, Santa Clara VTA, so it's the first public pension plan in the US, as far as we know, to end up putting Bitcoin on the balance sheet. And he coincidentally had made that same BlackRock-like recommendation back in 2019, and it took him until 2021 to get it approved in there. And so they did end up buying Bitcoin in the pension fund for the benefit of public transport workers, actually. You've got different forms of access. You've got the technologists and early enthusiasts, we call like the first wave, who were involved in Bitcoin OTC or via Bitcoin exchanges and brokerages such as Bitcoin Suisse, yourselves. And then, the second wave is the ETFs, which we've seen, right? That brings in people who don't self-manage their portfolio, or they don't want to create a separate account with a specialist counterparty. And then I think the third wave is effectively the institutions actually following through on their model portfolio recommendations and putting Bitcoin allocations into portfolios. Now, coincidentally, we're in Switzerland, and the Swiss National Bank has a 1% MicroStrategy in their share allocations, which is, of course, a proxy for Bitcoin. And Swiss National Bank is effectively a very large, successful hedge fund, in effect, right? But in this sort of sovereign sense. So you see different countries also having Bitcoin participation, also the Abu Dhabi sovereign wealth funds, and a few other countries, obviously El Salvador, and some US states, and the US government itself has been talking, but not yet reached the conclusion of how to do it, I think.
Despite being a relatively large holder of Bitcoin already, as per currently. But building upon what you mentioned, sovereign funds, nations, treasuries companies, and I'd like to get back on BSTR in a second. But obviously, the role of Bitcoin is clearly evolving. What role do you see it playing fundamentally in a financial system in this imminent wave that is coming?
Yeah, I mean, I think you can look at Bitcoin as a digital gold. I think that's the simplest explanation, and also mixed with the fact that it's in an adoption phase. So, some of the growth potential is from further adoption until it reaches market penetration or wherever that is, right? Unlike gold itself, which is, viewed as an inflation hedge or geopolitical uncertainty hedge, Bitcoin has that kind of flavor, but better functionality. You can move it at distance electronically. Infamously, some countries have requested delivery of sovereign gold and waited a decade to receive it, for example. So Bitcoin is a lot easier to secure as you can move it at a distance. You can do multisigs and all this kind of thing, right? So you can do more elaborate security mechanisms around it. So more functional, where gold is, mostly stored in vaults effectively, right? And then also as an upcoming competitor to gold that may overtake it. One of the comparators people want to look at is, will Bitcoin reach parity with gold, or when would that happen, and how much scope is there beyond that. And I think there's a fair argument that it has scope beyond that because it's more functional. It's somewhat intuitive that that could be the case because since the onset of digital computing and embedded computing devices, many previously analog things have been greatly improved and made more efficient and more functional by the use of digital technologies. So let's say the ignition on a car used to be a mechanical thing. Now it's digital, you've got mapping, flight control systems, many things are improved. And so this is a kind of a discovery, if you like, of a new form of hard money in effect.
Now, when it comes to the price to pay for that eventually, we're seeing an increased request towards compliance, towards disappearance of privacy when it comes to transacting. We're seeing some central powers accumulating it eventually. So to what extent is the original ethos and the original thinking behind it being compromised to enable for this next phase or next reality of its existence? Or is it maybe the other way around? Is it a Trojan horse to bring into the system some of these ideas that were eventually non-existent at all before?
Yeah, I think it's a bit of both. So I think if you ask people, would government and public company and sovereign involvement in holding Bitcoin, investing in Bitcoin be a risk? If you asked that question 5 years ago, they might have wondered whether those type of entities would seek to influence or change Bitcoin and erode its characteristics. But actually what seems to have happened is that many of those players are actually quite informed and understand the benefits of a bearer asset, like a geopolitically neutral asset, in the same way that they value gold, right? So, money, fiat within a country is generally under the political control of that country and maybe can't really be settled except in that country. So, there's a lot of different risks that come with that for a sovereign reserve perspective. And that's played out in the last 5 years, in fact, right? That now you see some countries bringing back sovereign reserves or, being more cautious about where they allocate money in countries that are not exactly allied, right? So sort of return to the physical. And so some countries buying gold, and of course gold is famously quite high at present, relatively speaking. And the same with Bitcoin. So I think you have that. And then in terms of, Bitcoin's value proposition is both the asset class, so the investment, which people can get more easily if that's their experience type via ETFs and managed funds. But also, the value proposition is the fact that you can use it. It's a permissionless global internet money. You can build applications on top of it as a startup or an individual. You can store it yourself. You can transact it yourself. So I think, so long as those capabilities remain, it's fine. They're both growing in parallel and they grow faster in different parts of the world. So I think in the Western world, people are relatively well banked. They have debit cards, payment apps, banking. Banking penetration is very high. Whereas in the emerging markets, you see more retail payments and remittance payments with Bitcoin and stable coins and things like that. So I think they're both growing at once. But it is interesting to see that as Bitcoin, as different types of entity, private companies, public companies, sovereigns, have entered the Bitcoin space, that Bitcoin's sort of consensus security model, the financial incentives around it have scaled and maintain the same thing. So if you like, it seems that the sovereign players understand why it is the way it is, and they value it for that reason, but with a sovereign mindset rather than an individual mindset. So those things are somewhat related, right? Which is I want to, hold on to my money. Maybe I want some form of asset protections. Sovereigns want that too, right? So I think it's working. It's, the scalability is working.
Interesting. One of the areas, and actually I did want to touch on it, treasury companies. You yourself are in the process of launching BSTR, if I understand it correctly. And we've seen MicroStrategy famously as a poster child, if you wish, or as driver of that. I'd be interested in that vehicle that's created a lot of discussions and in either direction. I'd be interested in understanding what the case is from your point of view, and specifically with BSTR, what it is that you're doing that might be different or special or unique.
Yes, I mean, I think evidently Michael Saylor with MicroStrategy, now Strategy, assembled this concept of a public company holding Bitcoin. Originally, they were just looking for an inflation hedge because there was a lot of QE, a lot of implied inflation in the US dollar. And so he was concerned that effectively the interest rate that the company was getting on its cash reserves was below the inflation rate, maybe by 100%, like 5% versus 10% kind of disparity, right? So he was, during the COVID era, trying to find a solution and landed on Bitcoin. So I think a friend of his, Eric Weiss, had brought up Bitcoin to him, and then he really dove into it during that period and decided, okay, let's do this. So, and then of course, once they started, they continued. So they continued to buy more Bitcoin and use the capital market facilities available to a public company to raise money to acquire more Bitcoin. Interestingly, in a way, because normally a company doesn't want to take on dilution any more than they need the capital to develop a new product line or something, right? And so here they are aggressively diluting, but in a positive way. The way I think about it is if you are developing a product, you raise some money in a private placement from big investors, and you develop the product. If it's a success, your market cap goes up by more than dilution, so it's a net win, right? And so with Bitcoin, they're able to raise capital, buy the Bitcoin almost immediately, and their objective is to increase Bitcoin per share. So they generally won't do transactions unless they do increase Bitcoin per share. And then that becomes a compounding effect where they're gradually doing a variety of different types of transactions that increase Bitcoin per share. There is certainly a fair share of skeptics in the traditional finance world and from the Bitcoin side who generally, they really want to hold Bitcoin and they're skeptical even about stocks and shares and things, right? Or certainly fiat currency, but also stocks and shares. And so you can see from the example that a public company has more flexibility than a closed-ended fund or an ETF. ETF can't raise capital. It can grow, but in a way that tracks precisely, or as precisely as they can engineer it to do, one Bitcoin parity, whereas a treasury company can overshoot and undershoot, so it has volatility, but it has the flexibility to use those mechanisms to increase Bitcoin per share. So it's effectively a form of active management. And then they moved on to convertible notes, and then finally onto these preferred shares like Stretch, which are not directly a form of debt, they're perpetual. And so they are actually, they provide the most concentrated increase in Bitcoin per share because it's a different share class, and so it doesn't constitute dilution to the Class A shares.
And building upon BSTR, if you may.
Yes. Yeah. So the interest for BSTR, I personally invested in a number of different treasury companies. Initially, MicroStrategy, also MetaPlanet, and a number of the European ones, Capital B, H100, and some of the US and international pipes into new treasury companies or existing companies that use the pipe capital raise process. And generally, by learning from the experience and thinking about it, we were, myself and the co-founders of BSTR were thinking that we would do things differently. And so, we talked to some of the treasury company management. They had their view, we had slightly different views, so we resolved to do it ourselves, if you like. And so, a primary differentiator is that we are active investors. So as well as using the capital market strategies, we try to create a relatively conservative return on Bitcoin, the asset class itself, in addition. And that's why, many of the treasury companies don't have a CIO, and we do, have a quite well-known hedge fund manager in the form of Sean Bill, who's been, personally active in Bitcoin for some time and got that pension fund in the US into Bitcoin starting in 2019 and actually within the fund by 2021.
I noticed you referred to Bitcoin as a discovery of hard money. And indeed, I've seen your post in the past about the difference between a discovery and an invention. Bitcoin is more a discovery than an invention. And I agree, or I think I agree. I would like to know more. And if you can clarify also to the audience, what do you mean exactly by this? And why is this important beyond just understanding better Bitcoin, if there is more you can say?
Yeah, I mean, I think it's important because a lot of networks are effectively startup shares or something, right? And it's hard for people to want to consider shares in a startup with a concentration of ownership and a CEO, or a foundation with a CEO, as a sovereign store of value or as a personal store of value. Whereas I think Bitcoin is effectively a discovery, and we can come back to that in a second, and it's extremely decentralized. Now, the reason I say it seems like it's a discovery is that there were people before Satoshi that tried to invent it, kind of. So, and I was one of the people involved in this exercise, which is in the mid-90s, there was another electronic cash project called DigiCash, which was operated from the Netherlands by David Chaum, who's famous cryptographer and is still active now in the crypto space, right? And that form of electronic cash was extremely private. It was effectively a stable coin. It needed a relationship with a bank to get money in and out, and then they would issue stable coins. And it was extremely centralized. It was running on the servers of that company. And so, people that were interested in this kind of technology were excited about its potential, the privacy, the kind of bearer characteristics. But what happened is the central point of failure failed. And so in the aftermath of that, there was a lot of disappointment in the kind of cryptography, internet protocol, the cypherpunks list and the cryptography list about that event. And we tried to draw lessons about what went wrong and what it would take to launch a new one in a way that overcame that problem. And so decentralization was a problem. So the question on our minds was, how do you make a decentralized version of that? And so there were a number of ideas put forward, and one building block that became common across all of the ideas was proof of work. So I'd proposed Hashcash, and initially as an electronic cash alternative, because electronic cash was challenging technologically to create in a decentralized way. So I came up with a sort of simplified proxy for it, which was Hashcash, so that you could at least make postage stamps that were not reusable. And so, this was in 1997, and within a day or two, there were lots of people realizing simultaneously in parallel that, wow, this could solve the need for a peer-to-peer network can't have a bank account. That was the fundamental problem we were wrestling with. And so, if you could have proof of work happening in a whole community, in a market of users, you don't need a bank account. You can mine the coins, and then you can have market trading between people who are not mining. And so that concept took root, I would say, within a few days of that paper. Followed from that, a lot of discussion about how to actually make it work, how to do the incentives, how to control inflation, I think was probably the main sticking point. The other parts of it were discussed, like the Byzantine generals problem, which is just computer science for coordinating behavior in a peer-to-peer network. And the concept that you could mine was there, but the question of how you could control the inflation in it was not well understood. And so by 1998, there were two kind of outline proposals where you had kind of supernodes or groups of humans that would decide that. Mm-hmm. And so that wasn't satisfyingly decentralized, so it didn't get implemented. And 2004, Hal Finney actually implemented another one called RPAL, but it didn't have any inflation control, and it was centralized but using trustworthy computing, which was a new technology at the time. And so then it wasn't until Satoshi in 2008 emailed me the paper and then started posting on different forums about it that somebody found out the remaining parts. One reason to say that it's a discovery is, we tried. Eventually somebody presumably would have cracked the missing part. And now that, since Satoshi posted it, it looks elegant and tidy in hindsight. But I can say from personal experience, it's hard to find those things when you're starting from a blank sheet of paper. And I think the other interesting experience was trying to improve it. So I spent like 3 or 4 months sometime into Bitcoin's network being running, trying to figure out, is there anything you could improve? And very curiously, most things you try to change would actually make it break or make it worse. And so it sort of explains why it was hard to discover, which is in this tiny, unique pocket of the design space of possible networks.
If you know the history and you read the white paper, then you see the elegance and you see that the building blocks were there, and sooner or later, maybe someone else would have found out how to do it, but it really emerged as something bigger than just the initial code implementation. I think it's a discovery in the sense also that, Bitcoin it had to exist and will keep existing as the hardest form of digital money. There will always be a Bitcoin that will survive in different implementations. We can talk about ossification, but yeah, actually, let's go more into the present. And one of the main narratives today, or topics of debate and discussion, is definitely how to deal with the post-quantum migration, post-quantum upgrade. Because, unless you believe that it will never be possible to realize a cryptographically relevant quantum computer at the scale required to run the Shor's algorithm and break elliptic curve cryptography, unless you believe that, then sooner or later we will need to do a post-quantum upgrade. Because, yes, elliptic curve cryptography. By the way, there are people who believe that elliptic curve cryptography could be broken anyway, even without a quantum computer. So maybe we want to have some kind of cryptographic agility. Now, my question for you is, how do you reason about this risk? Because, yes, the impact would be huge if we do nothing, but how do you assess the risk and specifically the timelines? Because we agree that if we have a CRQC tomorrow, we have a problem. But how likely is that for you? How is the market reacting to that? Do you think they're overreacting? Should they price it in? How do you reason around this problem?
Yeah, I think that the predictions of the time frame of how many years or decades it will take is hotly contested amongst experts. And so it's interesting to see Dan Bonnet, who's a Berkeley computer science professor with a very strong reputation in the applied cryptography world, which is relevant for Bitcoin. And we collaborated with him in the past at Blockstream on bullet proofs and things. So to see him say that, in his opinion, 2035 at the very earliest and quite probably later. So that's one take. Of course, other people are putting out the what if that, what if we're unlucky and it happens faster. And so I think the way we've looked at it at Blockstream is we don't have to answer that question. We'll just prepare. And then it's anyway useful for Bitcoin to be to give people a long period of time to migrate. So, if Bitcoin is able to, arrive at a conservative and robust initial post-quantum signature algorithm and deploy that, into the network via soft fork, then from that point forward, people can start to migrate. If the quantum hardware starts to develop at a faster pace, they can speed up their migration. The uncertainty comes from there not being a deployed system. Now, I think the actual technology for how to protect against quantum computers, like post-quantum signature algorithms, is actually quite well understood in the sort of more conservative sense, which is that the Lamport-based signatures, which actually date back to 1979, are using hashes. That signature scheme was proposed by the same guy that proposed the Byzantine generals problems, a computer science guy from old school computer science fellow. And now the NIST standard from I think October 2024, SLH DSA is an optimized version of that scheme. We think generally that's the more conservative choice, and Blockstream research has been working on survey papers to explain and explore what's possible to optimize, and actually concrete proposal of how to optimize the NIST standard for the Bitcoin use case, because the general use case has larger signatures. Now, the general problem with these signatures is they are bigger. And so they impact how many transactions you can do in a network and scalability, or, I think it's more complicated to bring in an upgrade that also, increases the discount for the signatures or increases the block size, because that in itself is another debate. And so with the Shrinks proposal, we arrive at a 324 byte signature, which is bigger, but not drastically bigger, whereas the NIST standard is in the, multi-kilobytes per signature, which is kind of a problem. So I would think that, we put it out as a concrete proposal. We implemented it in Liquid, which is the Bitcoin layer 2. And there has been a previous signature upgrade in Bitcoin, the Schnorr signatures in 2021. And Blockstream Research did a lot of the work, along with other contributors, on the Schnorr signature implementation specifics and multisig, the kind of more secure alternative to MPC that Bitcoin uses. And we're one of the maintainers of the libsecp library, which is where Bitcoin's cryptography lies. And so we're generally in a good place with a good set of expertise to be working on this, and a number of other not-for-profits, academics, and companies are also collaborating and making proposals. So I think the key to getting something done quickly is to not add too many features to it. So to just do an initial conservative, good enough, don't, wait 5 years trying to, because the other problem is the post-quantum research on improved signature schemes is also active. And so there's a real prospect of them improving over the next 5 years. But I think it's actually better to standardize on one of the currently, very conservative choices, try to get ecosystem consensus to deploy that, and then add another signature scheme 5 years later that's improved, because if the quantum timelines ends up being very long, many users may not actually migrate. The people that are professional in terms of custodians and exchanges, migrate early, but they're more able to, move to another scheme later, right? And so I think that's the way to combat the worry. And I think that the institutional participants view things more like a fiduciary. So they do care about the long tail risk and want to feel that there's a plan, there's an answer, that there's a known solution. So I think it's generally the case that there is a known solution. Like the post-quantum signatures have been known about for, 45 years. So we know it can be done. And I think the Shrinks version is optimized enough to be used as a change without affecting the rest of the system design, which is important to keep it simple. And then, improve things from there. Now, there are other more esoteric questions about what do you do about people who've lost coins and all this kind of stuff, right? So I think that it's good to start the migration so that we have more data. If you paint an example that, there's a scheme deployed in the next 5 years, people start migrating, and 15 years from now, there's some more steady progress on cryptographically relevant quantum computers, then you would have some data about, well, what proportion of coins have moved, what proportion of the value has moved. There's some loose indications of, coins that were lost. And so you could see how plausible it is that the coins that haven't moved are actually lost. In which case, and generally in internet protocols, the standards like SSL and digital signature standards, document signing, there is a process whereby signature schemes or encryption schemes that fail or partly fail become weaker due to cryptanalysis. So as you said, crypto systems get eroded sometimes due to insightful mathematicians, that they get deprecated and people migrate to a new one. So I think to my view, that's ultimately what would happen with Bitcoin. So best case is that we have a long time, but there are these kind of middle ground areas where even if, people didn't migrate or they lost the keys and found them later, for generally any seed-based backup, which is I think anything since 2015, there are alternative, more complicated ways that you can prove you own a coin in a post-quantum secure way.
So I think BIP 360 makes sense as an initial step, to remove vulnerability from the keypad span from Taproot and give easy way to do upgrades for cryptographic agility. So I hope to see that or a similar proposal implemented soon.
Yeah.
And
Well, I mean, I think whether it's Taproot or BIP360, you've got a similar question, which is, does if and when this happens, what happens to the spend path, right? And so whether it's inside or outside, I think, the supposition inferred there is that the hashed keys are secure. But I think that, the reason that when Schnorr was proposed with a pub key, I spotted it very early on and asked Peter Wool and others working on it, hey, this is not a hashed key. What's your view? And already, this is years ago, right? They were like, yeah, we know it's not post-quantum secure, but other than all of these bare pub key coins, the reused addresses, you also have to factor that most wallet architectures are relying on a server that has the chain code. So the server knows enough to collude with somebody with a quantum computer and hack most of the coins. So effectively their view was, if you get practical, most of the coins would be impacted. So they didn't, and there were benefits to using a bare pub key. So, and then there's the other distinction, which is, the long range versus short range question. If the quantum computers are quick, it depends on the type of hardware. Some of them are slow, but, very parallel, and some of them are potentially faster to other architectures. Then you could see potential for a key to be attacked after it's published, but before it's mined or something like that. So, and actually I had a related proposal in 2013 called committed transactions, which mines transactions before the miners have seen the transaction. So it mines effectively the hash of a transaction. And that also avoids this kind of race condition where somebody has visibility of the transaction to start rapidly cryptanalyzing the signature before it clears. So that's another potential
similar
workaround.
to Lifeboat from Taj.
It's a little bit. The main point is that their proposals to do a sort of commit reveal scheme,
Right.
but they still have. So yeah, they get a
need
bit
to submit
complicated.
to the miner privately.
Yeah, I mean the commit reveal is sort of two-stage. So what I'm saying is kind of simpler and has other benefits. So it's a similar concept, I think.
I will look at it. Very interesting. But to conclude on quantum, I agree that one way or another, Bitcoin will deal with it.
Yeah.
It's not as easy as just adding the post-quantum transaction signatures because, like shrinks, for instance, is stateful. It's not the stateless version, and that's how you gain a lot. Meaning that wallets need to adapt, and you need to take care of backups properly. So there's a lot to do on top. Yeah. But I think Bitcoin will be fine. And I think it's also clear by now that Bitcoin developers are working on it. As 1 year ago, people were still saying, Bitcoin is in denial. There are no developers working on it. Maybe even at the end of last year. And I was telling these people, look at Bitcoin developer mailing list. It's full of that. Look at Blockstream, what they're doing. Talk to Jonas Nick and his presentations podcast.
Yeah.
And by now, I think it's clear that Bitcoin will deal with it.
Well, I think the effect is that the developers are engineers, so they are not media savvy, and they're not. Whereas negative news is much easier to sell. Of course. People who are doing blue sky physics research for the last 25 years, this quantum hardware thing has been going on since at least like 2000, that it's expensive. And you need the attention to, some of the public companies, some of the private companies, they need to raise $100 million to do another machine. They can say the word Bitcoin and then there's a lot of attention.
That's a way to get the attention and the money eventually.
I have one last question. I know we're a little bit running out of time, but if quantum computing and CRQCs in general are not an existential, I mean, there will be a way to solve it. Is there any weakness or risk that you see that is at least worth talking about it? Like the usual question on the security budget and mining subsidy going down, transaction fees not going up enough. Do you think that's a real problem? I know you don't think about the spam debate as a real problem and the filters. I know. But what about the security budget or anything else that you think it's at least worth discussing?
Yeah, I mean, I think the spam is annoying. I mean,
Very much.
that is where Hashcash, my participation in proof of work came from, as I was annoyed about spam, right? So trust me, developers don't like spam. They say it's inelegant or hugely wasteful, in fact, right? But I think the problem is it's sort of fundamentally unstoppable in a peer-to-peer network that's designed, literally optimized and designed to be censorship resistant. And of course, people can hide data in any kind of field that it's not designed to go in. So, and then I think the security budget, I'm not so worried about it because Bitcoin price has much more than doubled every 4 years, which is the halving cycle. And I think there are also other things you can do, sort of build into the mining hardware logic, like into the physical machines, logic that they shouldn't start to mine backwards because that looks like an attack. They should only really, if they mine on block 100,000, they shouldn't go back to 99,999. They should go forwards, right? So you can do that. And then there are some already existing features in wallets where transactions they have an end lock time, so they're only valid forwards. So you can't mine them if you go backwards. And I think the last kind of very much more generic observation is that, most other forms of money are vastly less secure than Bitcoin. Humanity has an extremely strong need for this kind of thing. And so even if something, very, lightning strike, unlikely happens, there's so much, trillion plus incentive that even an inelegant workaround will be found to handle a gap where a workaround could be found. So I think that people are there's a lot of complicated technologies, but there's a phrase that money finds a way, which is if there's an enormous incentive for something to work and to happen, they'll make it work, right? The way that they make it work in the extreme case may not be very elegant, but they're not going to walk away from it because something unlikely happened. They would just repair it and continue. So from that point of view, I think all like black swan technology risks are actually absorbable, really, because people are looking at it like, I don't know, like a game of chess where they're not looking one move ahead and they're playing the grandmaster and they're like, but like if I move here, I could take his piece. It's like, yeah, but he has more foresight than that and he will do things before you get there, right? So I think it's like that with Bitcoin.
Interesting. One last question, if I may. I cannot let you finish our conversation without hearing from you a projection into the future. Specifically, as we spoke about the role of Bitcoin and how it has been evolving. Right now, we seem to be in a situation where it's a reserve asset and a store of value on the one side. At the same time, it seems to be potential financial transformative infrastructure. Do you see the role of it playing out more as a reserve asset, more as a financial infrastructure? Is it both? Where do you see it evolving? That's a strategic role of Bitcoin in the next 5-10 years.
Yeah, I mean, I think it's all of those things. So it's the bare electronic cash. It's the asset that sovereigns have taken an interest in. You have the Bitcoin dominance index, which is the proportion of the crypto market made up by Bitcoin. But if you look at the institutional segment of it, it's much higher, right? Because they're long-term, they're not there for short-term speculation. And then I think it's also the infrastructure because, the analogy is the TCP/IP of money, which is to say that all of the internet is built on, this base protocol that hasn't really changed in decades and decades, right? I mean, yeah, there's IPv6, but it's backwards compatible. And there, in that sense, it's the most robust of the technologies, I would say generally. It's taken a very conservative approach. And it's a kind of a Linux approach too, which is to make robust, dependable servers and everything. Eventually, most things migrated to it for that reason. So I think Bitcoin has that. And then it's also neutral, Typically, you have problems with sort of vendor competition or geopolitics or something where, you see in some countries they don't want to use, let's say, Chinese manufactured GSM infrastructure. And, of course, the Chinese, they don't want to use the French or the German Siemens infrastructure. So you get that kind of problem with, money, with the financial rails, right? The sort of geopolitical, the sort of national safety interest groups and boards. So Bitcoin, and then you've got the competition angle, right? Which is different exchanges have their own like exchange specific blockchain. And of course the competing exchange is not going to use it because they wouldn't use their competitors' thing. So then you get fragmentation where everybody's got their own blockchain, or you've got individual groups vying for attention who have, big ownership stakes in their coin and are marketing it, right? So it's, you get network effect value, and you need something neutral, and Bitcoin is the only neutral thing effectively, right? Or the main, neutral thing that people have put a lot of concentration in terms of, brand and trust and investment in infrastructure and equipment, wallets, rails, and that kind of thing.
Fantastic. Thank you. So both it is. Both it is.
Bitcoin fixes all the things, I guess.
Adam, we would love to continue speaking with you. I know you have a packed agenda. Thank you very much for sharing your wisdom and experience with us, and looking forward to what's ahead.
Thank you both. Very interesting conversation.